One of the tried and true methods to make money has long been through successful real estate investment. Purchase or obtain the land title. Develop the property's enhanced agricultural potential. Construct rental housing, or increase the investment property's tenant. Appeal to enable you to raise the rent. These are typical strategies for succeeding in real estate investment, not simply where individuals prefer to reside, but also other factors in the real estate market are always shifting. Hello everyone, welcome back to my channel. Today's video will feature real estate, key to financial success. But first, if you haven't already, please subscribe to my channel and enable the notification bell so you can see more interesting videos like this. The length of time you keep your investment property reduces your chance of loss in real estate. No matter the market, investing in real estate is a great method to increase wealth. Real estate investing is ideal if you have a creative mind. To succeed in real estate investment, you must comprehend the following fundamental ideas. 10 pointers for 2022 real estate investing success. Number 1. Picking the right market and timing the investment. Due to the need for financial gain, real estate markets operate in cycles, and each market is now at a distinct stage of the housing cycle. You need to locate markets that are expanding, where sales and prices are increasing, the cost of living is favorable, construction is minimal, and capital investment is rising. The variables at play in your particular real estate market will have the greatest impact on your purchase and its outcome. Avoiding really hot markets is a solid general rule for real estate investing success. Some local real estate investors may talk about how much their homes have appreciated or how rates are on the rise, but you run the danger of investing at the peak of the market and losing money. What unites all outstanding neighborhoods is this: low rate of crime, superior schools, access to parks and recreational areas, medical treatment is available, access to public transit for families, access to restaurants and retail centers, easily walked. These factors all contribute to a strong demand for homes. Real estate investors shouldn't pass up the chance if housing supply and demand are balanced, since entry-level property costs are still reasonable. Number 2. Buy low. A dividend-paying stock and real estate investing are comparable. The return on investment depends on how inexpensively you purchase the commodity. You must, however, consider the return on investment. You can spend little money to purchase a modest home in a dangerous area, but you won't make much money off of it either. Number 3. Access the secret market. The best scenario is purchasing real estate from a bankrupt seller, since you may obtain it for far less than its fair market worth. Forget foreclosure auctions. While they might produce savings, you frequently locate homes that require extensive repairs. Instead, search for properties with distressed sellers who haven't yet listed them. The perfect sellers are a divorcing couple or a family looking to recoup mom's estate. They only care about making a profit, and the buyer will likely receive a well-kept property. Number 4. Recognize your costs right away. The importance of knowing your costs upfront cannot be overstated if you are new to the real estate investment industry. Not merely the price of the property and the fee paid to the broker. You'll have to pay for repairs, and a lot of newbies to real estate investors aren't sure how much it will cost to remedy the electrical issues, rebuild the foundation, and get rid of the bug infestations. The majority of do-it-yourself projects reduce property value, and attempting to remedy someone else's plumbing and electrical problems might render a home unsellable. Others wind up losing money on a contract because they neglected to account for closing expenses, insurance, or utility bills. Don't imagine that painting a house a bit on the weekends would fix the issue. Number 5. Recognize the market. Knowing the market is one of the greatest methods to steer clear of issues when investing in real estate. You can assess the cost of an investment property by having a thorough understanding of your local real estate market. Know the average home value per square foot in a neighborhood and the potential rental income for a particular investment property. Make improvements to homes that will increase their attractiveness to potential buyers. Pick the greatest real estate markets, such as the Metro Atlanta area, which has had a phenomenal real estate boom. If there isn't much demand for a pool, don't tear up a nice yard to install one. While current average housing prices are close to their high in 2006, when inflation is taken into account, they become more accessible. Number 6. Reduce your risks when investing in real estate. You may control risk in a real estate investment in several ways. First, avoid getting into a lot of debt. Plan to put down at least 10% when purchasing an investment property that is for sale. A 20% down payment is preferable since it gets rid of mortgage insurance and frequently results in a reduced interest rate for the loan. Maintain a sizable cash reserve. Next, if you have the funds to carry the properties for a long time before it has to relocate, you'll lower the danger of having to sell a home quickly at a loss. A higher cash reserve will also enable you to cover unforeseen repair costs before listing a home for sale. It is conceivable to turn to a hard money lender to borrow the final $20,000 needed to renovate a house, but doing so eats into your profit margin and carries a hefty interest rate. Buy turnkey if you can't manage the possible stress of fix and flip. Number 7. Opt for the best rather than best in class. Making an effort to make a property the finest in the neighborhood is a typical real estate investing blunder. They could strive to transform working-class houses into luxurious residences by renovating them. That cannot be sold for the same price as it would be in an upmarket neighborhood. You ultimately lose money. Building a house too densely is wasteful. Instead of attempting to make an office building the most opulent or exclusive item, go for best-in-class features. Fix all that is broken or damaged first, then make subtle, inexpensive improvements that stand out. One example that comes to me is painting over a single color with 2 tones. Another is adding more practical garbage cans and soap dispensers. Leave out the Corian or granite countertops, the best equipment, and the pricey decor. Number 8. Increase real estate value. Find strategies to increase the property's worth so you can benefit more from the same investment. It can entail leasing space to a bank so they can set up an ATM. It is possible to search for value-added services in an apartment building. Offer garbage pickup for a little monthly cost from someone's door to the dumpster as an illustration. Or have the building hire a concierge or security guard. Now that the home is more appealing, you may increase the rent. This also relates to housing flipping in another way. Instead of buying the house, remodeling it, and then selling it to a home buyer, rent it out to someone. Start looking for purchasers as soon as the renter has moved in with a lease. This type of rental property is referred to as turnkey, and it is simple to sell to a novice investor who wants to get started in real estate investment right away. Number 9. Understand the guidelines for investing in real estate. Until you are certain that doing so is permitted, postpone turning the basement into a second rental unit. If local zoning regulations forbid it, don't turn the first floor of the property into commercial space. Before adding a small sandwich shop to a break area filled with vending machines, make sure to check the regulations for food service businesses. Never assume you can expand a building by adding a second story or another room. Before you begin any work, be aware of the extent to which permission is necessary. Number 10. Take into account unconventional real estate investments. Never forget that buying single-family houses or apartment complexes may both be profitable real estate investments. You might make investments in warehouses, industrial space, office buildings, and storage facilities. These all bring in rental income. With a triple net lease, where the tenant is responsible for basic insurance as well as paying the property taxes and upkeep, you might be able to lower total expenses when renting out offices and industrial facilities. The result of your investment is a consistent cash flow with little out-of-pocket costs. Gaining financial freedom through real estate investing is a terrific first step. Compared to the stock market, real estate investing provides higher cash flow possibilities. However, you must be careful to prevent errors that might convert your hopes of becoming wealthy into nightmares in bankruptcy court. If you enjoyed this video, don't forget to hit like, the subscription button, and the notification bell to get notified when new videos are uploaded from our channel. Do you think we compiled the right list? And who do you think should be here? Do well to share your thoughts in the comment section. See you in the following video.